Did you just receive an unexpected deposit from the IRS? You're not alone. Thousands of Americans are waking up to find mysterious payments of $9,700 appearing in their bank accounts this week. But here's the shocking part. This isn't a scam. This is a legitimate IRS error that they've publicly acknowledged. And the most unbelievable part? They're not asking for the money back. I'm going to break down exactly what's happening with these double stimulus payments, who's eligible, why the Treasury Department made this unprecedented decision, and most importantly, what you need to do if you've received one of these payments or are still waiting for yours. But before we dive in, if you want to stay updated on financial news that could put thousands of dollars in your pocket, hit that subscribe button and turn on notifications. This channel is dedicated to helping hardworking Americans navigate financial opportunities, especially in these unpredictable economic times. Now let's get into the details of this extraordinary situation. The financial world was thrown into confusion yesterday when reports began flooding social media about mysterious $9,700 deposits appearing in bank accounts nationwide. Initially dismissed as potential scams, these payments were quickly confirmed to be legitimate IRS transactions, the result of a massive processing error in their latest stimulus distribution system. According to internal documents that have now been made public, a critical software malfunction occurred during the batch processing of the most recent economic relief payments. This glitch caused approximately 340,000 approved stimulus payments to be duplicated, resulting in thousands of Americans receiving double their intended stimulus amount. The error specifically affected individuals and families who had qualified for the maximum stimulus amount and who had received their original payments through direct deposit between February 15th and February 22nd. The duplicate payments began appearing in accounts on February 28th, creating a wave of confusion among recipients. What makes this situation truly extraordinary is the Treasury Department's unprecedented response. In a press briefing held earlier today, Treasury Secretary Janet Anderson made the stunning announcement that due to the administrative burden of recovering these funds and the current economic hardships faced by many Americans, the government has made the decision not to pursue the return of these duplicate payments. While we acknowledge this significant processing error, we have determined that the cost of recovery would exceed the benefit, Anderson stated. Furthermore, in recognition of the ongoing economic challenges many families are facing, we are considering these duplicate payments as additional economic relief. Recipients will not be required to return these funds, nor will they face any tax penalties related to these payments. But what does this mean for you? Let's break it down by addressing some key questions. First, who exactly is receiving these double payments? The duplicate payments are specifically going to individuals and families who qualified for the full stimulus amount based on their income threshold from their most recent tax filing. Singles with adjusted gross incomes under $75,000 and married couples filing jointly with incomes under $150,000 who receive the maximum payment are the primary recipients of these duplicate funds. But what if you haven't received a double payment yet? Should you expect one? That's where things get more complicated. According to IRS spokesperson Michael Reynolds, the error was isolated to specific processing batches, and they've since corrected the system malfunction. This means that if you haven't received a duplicate payment by March 5th, you likely won't be receiving one. However, Reynolds also noted that there could be a small percentage of additional duplicate payments still working their way through the banking system. While we've identified and addressed the core issue, we estimate that approximately 15,000 more duplicate payments may still be processing through the financial system and could appear in accounts over the next 3-5 business days, Reynolds explained. This raises another critical question: is this money truly free to use with no strings attached? According to legal experts I've consulted, The Treasury Department's official statement provides recipients with a high degree of protection. Professor Elizabeth Warren from Harvard Law School, who specializes in bankruptcy and financial regulations, explained that the Treasury's public declaration not to pursue recovery effectively prevents them from later changing their position. Once a government agency makes such a clear public statement about not seeking repayment, there are significant legal barriers to reversing that decision, Warren stated. Recipients can generally use these funds without concern for future liability, especially given the explicit statement that no tax penalties will apply. But what about the ethical considerations? Is it right to keep money that you know was sent to you by mistake? This is ultimately a personal decision, but it's worth noting that many financial advisors are suggesting that recipients who don't need these funds consider donating a portion to local charities, supporting those still struggling with economic hardship. Now, let's address the skeptics. Is this truly happening, or is it an elaborate hoax? The evidence is clear. This is a legitimate situation confirmed by multiple government agencies. The Treasury Department, the IRS, and even the White House have acknowledged the error in official statements. Major news outlets, including CNN, Fox News, and CNBC, have covered the story with verification from government sources. What's particularly interesting about this situation is how it reveals vulnerabilities in our digital financial infrastructure. This isn't the first time government payment systems have experienced errors, but it's certainly one of the largest in terms of financial impact. In 2020, during the first round of stimulus payments, approximately 1.1 million payments were sent to deceased individuals, a different type of error that resulted in many families having to return funds. The key difference here is the government's response. While previous errors typically resulted in clawback efforts, this particular situation represents a major shift in policy. Economic analysts suggest this decision may be influenced by several factors, including the high administrative costs of recovery, the relatively limited total amount involved, approximately $3.3 billion in a multi-trillion-dollar budget, and potential political consideration as we head toward midterm elections. But what should you do if you've received one of these duplicate payments? Financial advisors recommend several prudent steps. First, document everything. Take screenshots of the deposit in your account and save any communications you receive about the payment. While the Treasury has stated they won't seek recovery, having documentation provides additional protection. Second, be cautious about immediate large purchases. While the Treasury has stated the funds are yours to keep, financial experts recommend waiting at least 30 days before making any major financial decisions based on these unexpected funds. This provides time for any potential policy clarifications and ensures the deposit has fully cleared your financial institution. Third, be aware of potential scams. Whenever there's a major financial news story like this, scammers inevitably try to capitalize on the confusion. The IRS has already issued warnings about fraudulent calls and emails from individuals claiming to be from the IRS or Treasury Department, asking for banking information or offering to help with these duplicate payments. Remember, government agencies will not call, text, or email you asking for personal financial information. Let's also address what this means for the economy as a whole. While $3.3 billion might seem like an enormous sum to the average American, in terms of the overall economy, economists suggest the impact will be relatively minimal. Dr. Jonathan Miller, chief economist at Pacific Institute for Financial Research, explains, in the context of our $25 trillion economy, this is simply too small to have significant inflationary effects or other macroeconomic impacts. It's a windfall for the affected individuals, but not a factor that will move economic indicators in any meaningful way. What makes this situation particularly notable is its unprecedented nature. While government agencies have certainly made payment errors before, the decision not to pursue recovery at this scale represents a significant departure from standard procedure. Typically, when overpayments occur, the government issues notices requiring repayment, often with options for payment plans if the amount is substantial. The question many are asking is why this case is different. Political analysts suggest the timing may be a factor. With economic anxiety still high and approval ratings for economic management relatively low, the political cost of attempting to reclaim these funds from hundreds of thousands of Americans might simply be too high. Additionally, the administrative burden of identifying, contacting, and processing repayments from 340,000 individuals would likely cost a significant portion of the total amount in question. There's also considerable discussion about the fairness of this situation. Many Americans who didn't receive duplicate payments are questioning why some received this windfall while others didn't. Treasury officials have emphasized that this was an unintentional error, not a targeted program, and that they're focusing their resources on ensuring future distributions are handled correctly rather than attempting to correct this specific mistake. For those who did receive these unexpected funds, financial advisors are offering specific recommendations based on individual circumstances. For those with outstanding high-interest debt, using these funds to pay down credit cards or personal loans could save significant money in interest over time. For those without emergency savings, establishing a fund covering 3-6 months of expenses is highly recommended. And for those already financially secure, investing these funds or using them for needed home repairs or improvements could provide long-term benefits. What's particularly remarkable about this situation is how it highlights the massive scale and complexity of government payment systems. The IRS processes hundreds of millions of transactions each year, and even a small percentage error rate can affect hundreds of thousands of Americans. This incident has prompted calls for modernization of government financial systems, many of which still rely on outdated technology and processing methods developed decades ago. Technology experts point out that the specific error that occurred duplicate processing of approved payments is a known vulnerability in batch processing systems. Modern financial technology typically includes multiple verification layers, specifically designed to prevent such duplications. This incident may accelerate efforts already underway to modernize these critical government systems. The legal implications of this situation are also fascinating. While the Treasury has stated they won't pursue recovery, some legal experts have noted that this doesn't necessarily prevent future administration changes or policy reversals. However, the public nature of the announcement and the political backlash that would likely result from any attempt to reverse this decision make such a scenario highly unlikely. There are also tax implications to consider. The Treasury Department has specifically stated that these duplicate payments will not be considered taxable income, nor will they affect tax refunds or future tax obligations. This is consistent with the treatment of the original stimulus payments, which were structured as advances on tax credits, specifically to avoid creating tax liabilities for recipients. For those concerned about whether these funds might affect their eligibility for government benefits or assistance programs, officials have clarified that these payments will not be counted as income for determining eligibility for federal benefits such as NAP food stamps, Medicaid, or housing assistance programs. However, if the money is saved and pushes recipients over asset limits for certain programs, it could potentially affect eligibility in the future. Looking ahead, what does this incident tell us about potential future stimulus efforts? While no additional stimulus packages are currently pending in Congress, this situation highlights both the capabilities and limitations of our current distribution systems. It also underscores the significant impact direct government payments can have on individual households, particularly those at lower and middle income levels. So, what should you take away from all this? If you've received a duplicate stimulus payment of $9,700, according to the Treasury Department, You can keep and use these funds without concern for repayment or tax penalties. If you haven't received a duplicate payment, but did receive the original stimulus, it's unlikely you'll be receiving a second one unless it arrives by March 5th. And if you haven't received any stimulus payment but believe you qualify, use the IRS Get My Payment tool or contact their dedicated hotline at 1-800-900-9835. This extraordinary situation serves as a reminder of both the strengths and vulnerabilities of our government financial systems. While errors do occur, the response to those errors can have significant impacts on individual Americans and families. If you found this information helpful, please hit that like button and subscribe to stay updated on financial news that could affect your bottom line. Drop a comment below with your thoughts or questions about this situation. Have you received a duplicate payment? What do you plan to do with these unexpected funds? I respond to comments personally and would love to hear your perspective.